Coach here, and in this video we'll talk about the exchanges and some of the players in the futures market. So the first thing that we need to understand is that there are two distinct, although there's some subcategories, types of traders that are involved in futures markets. The first one is a hedger. So a hedger is somebody who has a product for sale or needs to buy a product in the future and looking to lock in a price. So for example, if you are Coca-Cola and you need to buy sugar, there is a sugar futures market that you can buy sugar out into the future so you know exactly what it will cost you. Those are people who are either going to take delivery, in other words, the actual sugar itself, or they are looking to hedge their exposure. So in the first video, I mentioned something about farmers and agricultural products. So for example, I have 80 acres of corn planted, and I am concerned that perhaps the price will drop. So what I do is I go in and I hedge my risk. I sell whatever the number of contracts of corn that would be the same as my field, or something close to it, some type of percentage. And that way, if price does drop, when I go to sell the corn on the open market, although it's coming in cheaper than I originally thought, I will have made money by shorting the contract. Conversely, if I buy corn contracts, I'm expecting perhaps price to move higher. And that way, if I already have corn locked in somewhere at a specific price with a written contract, I can, for example, let's just say I'm selling it at $6 a unit and price goes up to $9. Well, that contract, I can't just change that. But if the price goes up to $9, I then get the difference in the futures contracts and collect the $3 from over there and $6 from the actual customer. Now, granted, these are very simplistic examples, but it gives you an idea of what happens in the hedging part of the market. And the hedging part of the market is what started everything at the exchanges. It was originally all about cattle in Chicago. Then I think wheat and corn came next. But the cattle market was a big deal. The slaughterhouses in Chicago, of course, were a major part of why that became such a big city, as beef, live cattle came in from the western part of the United States to feed the eastern part of the United States. There had to be a way to conduct business. You can take delivery, and that is different in the sense that if I buy silver right now at $34 an ounce because I use a lot of silver, and if it rises to 39, as long as I keep that deliverable contract, it doesn't matter. That's what I pay. There will be a place where you can meet up with people who owe a certain amount of silver to a certain amount of buyers, and they actually physically exchange. That is not something that happens very often unless you're a huge corporation. Now, speculators, of course, are just simply going to be trying to make money up and down. They're traders. That's all they are. Speculators allow for an efficient market because there aren't always producers or consumers of an asset jumping into the market at any one particular spot. But there are people like you, people like me, who are willing to buy and short silver, gold, whatever, and try to make money off of it. It allows for the markets to move freely. Speaking of the markets, there are a couple of exchanges you need to be aware of. There is the CME Group. Chicago Mercantile Exchange was the beginning, and it has since branched out. It's a lot like the stock market world, where the New York Stock Exchange isn't just the New York Stock Exchange anymore. There's a bunch of conglomerate companies. Same things happen in the futures markets. So you have the Chicago Merc, or the Chicago Mercantile Exchange, the Chicago Board of Trade, the New York Mercantile Exchange, the Commodity Exchange, or the COMEX, and those are your four really big ones in the CME Group. So these will include equity index futures, S&P 500, NASDAQ 100, and the Dow Jones, for example. The Chicago Board of Trade is Treasuries, Euro, Dollar, SOFR, which we do not offer here at Hola Prime. The NYMEX, the New York Mercantile Exchange, offers energy. The COMEX is basically metal. The agricultural commodities are CME as well. The CME Group is by far the largest futures market in the United States, and one of, if not the biggest one, in the entire planet. So there are other exchanges that exist out there. So for example, there's the ICE, or the Intercontinental Exchange. It features basically on the Hola Prime platform, the Russell 2000 index. It's its main financial futures. But there is the Brent market, which is not offered. And then there's softs like coffee, cocoa, cotton, orange juice. And then the Dixie, or the US dollar index. There is the CBOE futures exchange, including the VIX and other smaller contracts that involve trading overall. 95% of what you're trading here is going to be in the CME Group. The CME Group is a behemoth in this industry, and therefore that's really what you're looking at. Again, you don't have to worry about this because I'll show you on the platform what the difference is. So here we are on the Project X platform again, and I'll show you when you go in and you search for a product, you'll notice it doesn't say anything at all about the exchange. So for example, let's go to soybeans. In full disclosure, the market is closed at the moment, so it's not moving. We just closed a little while ago, but we just flip right over to the soybeans market and the Chicago Mercantile Exchange. Then we can go to the COMEX and get gold pricing. Again, they're all part of the same group. It's all being integrated. But there's also the Russell. So the RTY. Russell 2000 is over at the ICE, or the Intercontinental Exchange. Again, makes no difference. You can see that we are settling for the day here right before the close in this market. So it's pretty quiet, but there are trades being made. In other words, you really don't have to worry about such things as the exchange that it's on. It's all centrally routed into your platform. So doesn't really matter. You won't notice the difference. And in fact, as somebody who's been trading futures for several years now, I don't even think about it.
Hola Prime, trade with transparency.